Oh, no problem. Hi trader, here is the weekly Forex video again, looking at the euro dollar and pound dollar and dollar yen. First of all though, be aware that this video is shown to a global audience but may not be suitable for everyone. Please visit animalmarketsglobal.com, select your country of residence, and contact an appropriate entity for more details. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This video is for informational and educational purposes only, and by continuing watching this video, you agree with this disclaimer. Alright, let's start with the euro dollar daily chart. I'm looking at a rising wedge formation, the red line indicating the resistance here, the trend line, and the green trend line indicating support. And the formation is showing weaker highs and a rising wedge formation, which is a reversal pattern. Last week, price was not able to push and break above that R1 and the previous top at 108.28. For me, a very key level, because if price this week is able to post a daily candle close that is above 108.28 with a close near the high, something like this, for instance, as I'm drawing right here, for me that would indicate a breakout on the daily chart to the upside. Price would break above the Keltner band, break above the previous top. So for me, that would indicate a breakout, and I would be looking basically for a small little retracement of that bullish candle, maybe back to 108.25-ish, and look for a continuation up to 109.50, 110, which is the next resistance zone. Basically a psychological round level, of course, very strong level of 110, and price could bounce back at that spot. So that's what I'm looking for if it breaks out. If price does not manage to break above at 108.28 and starts breaking actually the support level, then there could be a breakout down to 107 and perhaps even lower down to 106 and even 105 as it tests lower support levels. So that could be the bearish break. In that case, I would like to see a bearish close below these lows. I'll tell you exactly what that level is. That is, the lows are around 107.70, excuse me. So a close below that level, for instance, a candle that looks like this, for instance, with the candle close near the low, I would be looking for a small retracement of that candle and then a follow through down to test the next support trend line. So very interesting spot. I think that this is a bounce or break spot, a key decision zone right here. I will let price action decide which way it will break out, up or down. I will look for a candle that has a strong close either near the high or the low to see if the breakout or the bounce really has some strength. And then I'll look for a follow through after that candle is visible. So that's my plan on the euro dollar for this week. In just a moment, I'll take a look at the pound dollar and dollar yen as well. But first of all, be aware of these webinars. Nanette is going to take a look at the euro dollar and many more pairs as well on his weekly recap and his live trading session on Wednesdays. I myself take a look at intraday on Tuesday, and Wednesday I'll take a look at strategy, also from an intraday breakout and bounce perspective. And Thursday, Nanette and I together take a look at trading news events. So I hope to see you in one of these webinars. Next pair on my list is the pound USD. Of course, be aware that the Brexit process, the triggering of Article 50, which starts the official negotiations of the UK leaving the EU, might occur this week, probably on Wednesday, the 29th of March. The Prime Minister of the UK indicated that it would be by the end of March, which is this week. So that's something we want to be aware of with the pound specifically, in general, but of course also pound dollar specifically. So that's something to be aware of. But in general, I am looking at a larger triangle, of which I think that this is a wave C, this could be a wave D, and price is going up for a wave E, which means that this particular top is very important, because if price breaks above it, it is not a triangle anymore. If it stays below it, it is still a potential triangle. So that orange line, very important in my view. Within that wave E, there could be a three-wave pattern. So this could be part of it. This could be the first. This could be an A. This could be a B. There could be a C still within that larger E that I was talking about. All right. So that's why I have this fib on this swing high, swing low, because price could move down, bounce at the 50 fib to finish the wave E at a higher spot, and then move down again as it finishes wave E. So this particular scenario, I think, is the most likely. That's why I'm keeping an eye on price at any of these fibs. Most likely, well, any of these fibs, but I would think most likely the 50 or 61.8 are probably the the most likely candidates, and the second most likely are the 38 and the 78.6 fib. Now, until price gets to that spot, there is a potential for price to retrace down to these fibs. So if I zoom in one time frame to the hourly chart, there is a way perhaps to see that with divergence, double divergence between these tops, and the fact that the rising wedge has been broken, we can add those trend lines like this. You can see that's the resistance line, and this is the support line that has been broken. And you can see that price is making also a potential head and shoulders. So if the neckline of that head and shoulders is broken, which is close to, as you can see, it's threatening to break it. Let me make that correct. Okay, there you see, that's the trend line. That could be then a continuation of this retracement back to those fibs. So I would be looking for downside reversal trades. Price could stall maybe at the 23.6 fib, build a bear flag, but I would eventually expect price to fall and continue eventually down to the 50 fib, which is, I think, the first more serious support level that I would expect a potential bounce for that larger wave E triangle. All right, so this is my main focus. At the beginning of this week, I would expect some bearishness, but eventually there could be a bullish bounce. Of course, once again, all within the context of a larger Brexit that is potentially occurring this week. Dollar yen broke the support level, as you can see. Look at this, broke this bottom. I was expecting the continuation to the upside, but price did not manage to substantially break through this resistance, and instead turned at that spot and continued to fall and broke this bottom. From my perspective, this could still be a wave 4, and this would be a wave 3, as long as price stays above the 50 fib. The 50 fib is also at a psychological round level of 110. So as long as price stays above 110, I think it still could be a bullish bounce for a sturdy wave 5. So I'm looking for a bullish turnaround at 110 for a pretty substantial uptrend continuation at that point. But if price breaks through 110, 109.75, then the wave structure could be different, and price could then fall from the 50 down to the 61.8, and then from the 61.8 perhaps even down to the 78.6 fib. There's some bearish space to the downside if that's the case. Until price reaches the 50 fib, on a 4-hour chart, I'm expecting price to make an upside. This is maybe a wave A, this is a wave B, and I'm expecting price to make one more wave C down to 110. So somewhere, if I put a fib from here to here, somewhere around this 38.2 fib at 112.50 and this resistance zone, max 113, I think there could be a bullish bounce up to that level, and then the bearish turnaround for that one more lower low for a turn back down, and a continuation for price to fall from 112.50/113 down to 110, and then bounce back up at 110. All right, for more analysis, webinars, and articles, please check out admiralmarkets.com or, of course, any of these channels, and wish you all good trading. Cheers!